We're taking our Shake Shack burgers with us to the movies on this consumer goods edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is March 8th, 2016, and joining me to talk about the Shake Shack earnings release and a big movie merger is the incomparable Vincent Shen. What's up, man?
Hey, Sean. How's it going?
Not too bad. How much House of Cards have you watched?
I figured you would bring this up. I have only seen 3 episodes. I've not been able to binge my way through it quite yet, like a lot of people have.
3? Okay. I won't spoil anything.
Yeah, do not spoil anything for me or our listeners.
Okay. And if you did not hear President Frank Underwood visit us in the studio last week, you should probably go listen to the show, which occurred on Friday. Anyway, moving on.
Yes.
Shake Shack, everybody's... did you read that article I wrote about them like 6 months ago?
Okay, so I know your stance
The
on this
valuation on this company
I know your stance on this company. We can get to that, but... You know, they did report a pretty good fourth quarter and solid, full year results.
What, are you talking about their first profit since having their IPO, Vince? Is that what you're talking about? All right, what were the results?
All right, sure. So, so keep in mind, everyone, that this is the 5th quarterly earnings announcement from the company since their IPO, which was last January. And just a reminder that the company priced at about $21 per share during its IPO, and then its first day of trading it more than doubled and closed at $45.90. And it's been on obviously pretty volatile path since then, and as I'm sure you've enjoyed a little bit, it peaked at $93 per share in May. And
I was about to ask you, I was like, it peaked out somewhere crazy.
So within about 4 months of pricing, it hit over $90, and
because it was going to be
basically come down. What were you saying?
It was going to be the next Chipotle, Vince. Of course, it had to go to 100.
Well, even their long-term trajectory doesn't put them at that many locations. But $93 per share in May. Now they're trading down to around $30-$40, and the thing is, like, investors who got on the ground floor, I'm sure, were sitting back and still are enjoying pretty significant gains, right?
I mean,
it's almost 100,
right?
almost doubled,
yeah.
Exactly. But we'll see that, especially with some insider selling, that there obviously was a bubble there, so to speak.
So how were comps, revenues, all that good stuff?
So getting to down to the actual details of the release, with the latest round earnings, total revenue was up for the quarter about 47% to $51 million. And then specifically the Shack sales, so excluding the licensing revenue they do internationally, it was up 49% to $49 million. And earnings swung, as you mentioned, from a 5-cent loss per share in the year-ago quarter to an 8-cent per share profit. And they managed to do, for a 5th quarter in a row, or for their 5th release in a row, they bested Wall Street's top and bottom line forecasts. So they're 5 for 5, batting 1,000 right now. And despite that, the stock's down about 7%, 8% before we came down to the studio. And the thing is, even beyond the headline figures, I thought there was a lot to like in the press release, at least for the quarter. So same Shack sales growth was 11%. During the holiday period. So, what people generally call like same-store sales growth, comparable store sales growth. And that's up from 7.2% in the year-ago period. And for the full year, same Shack sales growth was 13.3%. Pretty incredible. And that's up from just 4.1% in 2014. Tons of improvement there.
It's a lot of milkshakes. That's good for them. Okay.
And the Shack-level operating profit just about doubled to $53 million during the year. So, the big thing here that I want to stress is their operating margin expanded almost 5 full percentage points to 28.9%. So pretty impressive. And the restaurant base grew with 13 domestic and 8 international Shacks opened last year. So it's about a 33% increase in their system. And that includes their first Shack in Asia, opened in Tokyo, actually.
Did you, half these gains, like the operating margins and everything, did you know that half those gains actually came from their original location in Central Park in New York? I'm kidding, but that's what I think. Because what, they only have like 20 some odd locations?
No.
Correct me.
Total, they have like about 84. But
Oh, wow. I'm
it's
sorry.
split.
Okay.
It's
Yeah.
split. 30-ish or so are international, and then the rest
That's what I was
are
probably
domestic.
thinking. Okay.
And
So what was the guidance? Because that's arguably the reason that the stock fell, because this
Absolutely.
company, the reason people are paying this valuation is for the growth.
Well, you just heard the quarterly and the full year 2015 numbers. Pretty impressive. Same shack sales, like, wow. But the guidance is where they're taking this hit on the chin here. So looking forward, the company is going to be entering some new markets in 2016. Big ones are like Los Angeles and South Korea. Again, they're thinking about 13 domestic locations for new openings, and then 7 of their international licensed ones. And then...
That's what That's what I was thinking. They're going to open 20-ish stores.
Yeah.
That's what I was thinking. Okay. Anyway.
So
sorry.
in terms of the guidance itself, 2016 revenue is expected between 237 and 242 million. So the midpoint there would represent about 25.7% growth over 2015, whereas 2015 saw 61% growth. So that deceleration, obviously, people are not happy about that. And same shack growth I think this is also what really people got worried.
Ooh.
Going from that 13+% that I mentioned earlier to between 2.5 and 3%. So that's below even 2014 levels.
That 13% number you're talking about, that's Chipotle quality. Do you remember like some of our first episodes a year ago? I mean, we were just talking about how does Chipotle have these? They're already huge and they're having like 8% sales. It was just absurd. Then of course they had the problems that they're running into today with I don't know, cilantro poisoning, but anyway.
So,
but this 2.5, I mean, that's like
McDonald's
just look at it, in a good year or something.
It's just such a stark difference from what it was able to log last year, and that I'm sure has a lot of people worried. And the thing is, though, actually, these numbers were just shy of what analyst estimates were for 2016. So not actually in terms of the Wall Street forecast.
I wonder if they wanted them to beat
surprise.
their estimates, or anyway. Of course they want them, but
so
did they secretly actually want them to?
So despite the rough year trading, stock, like we mentioned, the stock still almost doubled from its IPO price. So the valuation, and I know this is where you harp on things sometimes, is high. It trades about 5.8 times expected 2016 sales, right, based on that guidance, and 97 times forward earnings. So
I'm sorry, what was that? 97? I plugged my ears, but I still heard
it's just shy of triple digits, which enjoyed for pretty much all of 2015. But yeah, it's high. I cannot deny that.
I hope our audience heard my sigh there.
So keep in mind that's a hefty premium to most other restaurants, and that includes the full spectrum, like the traditional leaders like a McDonald's to the newer generation of like Chipotle, Choice Holdings. Like that's a premium to all of those guys. And
with burgers,
as you can imagine, at those levels, investors, that's driven by really high growth. Either top or bottom line or both. And so for them to have this outlook for 2016, things slowing down, it doesn't surprise me that the stock's trading down and that investors should be concerned or, thinking about where that valuation comes into play or where it comes back into more reasonable levels. And I think another really bearish signal for investors was, third and fourth quarters last year, even continuing through the first few months of 2016, a lot of insider selling. It seems like, a lot of these bigger shareholders kind of, they know where the stock potentially is going and they're cashing out now. So it's definitely a concern. And, on a positive note, I will say that the company's in a pretty strong position to invest in their global growth plans for new restaurants. They've said there's 84 stores currently. They had previously stated goal of about 450 restaurants as their
on planet Earth.
for the system, and their cash balance jumped from less than $3 million to over $70 million last year. So definitely lots of money to put into these new locations.
I wonder how much of that came from the IPO proceeds, kind of, sort of, maybe? I don't know.
I don't recall.
My big complaint, and when did I write that article? Google Motley Fool, Sean O'Reilly, Shake Shack if you want, listeners. My big thing is, as our listeners may or may not be aware, I have very simple food tastes. I have a very Midwestern palate.
Yes.
Vince, I'm sure, can.
I give Sean a lot of grief because he sometimes, I think, eats things a little too plain. You gotta adventure out a little bit more with
There is nothing I love more than cheeseburger and fries. I consider myself a cheeseburgers and fries connoisseur.
And do you enjoy a Shake Shack burger?
This
and fries?
is just it. Shakes, amazing. Burgers, awesome. Fries, great. It's a little pricey, but it's fine. You're probably getting what you pay for. My thing is, there is no food that is more commoditized in the United States of America than burgers and fries. I can go get a burger and fries. I don't know. We could go to the Italian deli. We could go to the Trademark Bar up the road. I can think of probably 5 places I can get a burger and
just
fries
within a few blocks
within 5
of here.
minutes.
Yeah, you're absolutely right.
The competitive advantage that Shake Shack offers is vastly inferior to like a Chipotle, which they seem to got the.
Well, Shake Shack has
the fast casual
Shake Shack
Mexican thing going for 'em.
has its brand power right now, and the fact that it's very, very popular. Its location, its new location openings are known to have lines out the door and down the block. And when you have that kind of consumer, diner following, it definitely helps and contributed to, I'm sure, a lot of the hype with the stock price hitting $90+ last year. So I'm not, there's definitely no discounting the fact that they are like king of the heap right now in terms of burger world, but enough to justify where they're trading at.
Do you think that like an LA location, which I'm glad they're doing that because that's obviously a natural jump, but do you think an LA location can get anywhere close to the revenues of their original location in Central Park? Because I understand that one's like.
Yeah, but that's tough to call because there's like
location.
that has such a storied history.
Because it was literally a shack in Central Park.
It started as like a hot dog cart.
Yeah.
And so, when I lived in New York, everybody talked about Shake Shack, and this was before the IPO. It was, this New York this very New York centric, it had that feel to it. It was very, very popular. They've been able to, I think, replicate a lot of that worldwide, but
I don't know. Okay. All right, well, before we move on, I wanted to point our listeners to the newly redesigned focus.fool.com. There you can take advantage of a discount on the Motley Fool Stock Advisor newsletter that works out to $129 for a full 2-year subscription. Once again, that is focus.fool.com. And moving on, I'm going to prove once again how green I am. AMC is buying a theater chain that I had not heard of, and I'm really sorry. Carmike, how big are they?
I'm surprised. They're the number 4 operator, actually.
They are.
Yeah.
Is it a West Coast thing?
I think it's more so southeast region, which actually, as we'll get to, pairs really well.
Oh, it does?
AMC.
Okay.
Yeah.
All right, cool. Well, let's dive in. What are the details?
Sure. So last Thursday, AMC Entertainment Holdings, they're the number 2 theater chain, by screen count at least. They announced they'd be acquiring Carmike Cinema's number 4 chain, and they're going to join up to beat out number 1, who's currently Regal.
See, I'm a Regal man. Grew up.
To create the largest theater chain worldwide. And just so our listeners know, the number 3 player is actually Cinemark. So the CEO of AMC is pretty new. He took the reins in January. His name's Adam Aron. He came from Starwood Hotels and Resorts, and he's already making his mark. He took over, like I said, just 2 months ago, a little over. And apparently there were 2 previous attempts for AMC and Carmike to do a deal. I think it was over the past 4 years, but they always fell through.
Wow.
But he made it happen.
In your research, was it a price question? Why did it fall through that many
I'm not
times?
sure.
Really
I think there was some concerns that we'll get to around the deal, but I think it's really driven by the new CEO and also the owners of AMC, which we'll get to. So the purchase price was $30 per share, about a 20% premium to where Carmike stock closed before the announcement. So including debt assumption, the deal value comes out to about $1.1 billion. And AMC, I thought this was an interesting metric, is paying about $376,000 per screen. And
Does that sound right? I'm picturing, yeah.
On that note, AMC currently operates about 5,400 screens, so adding the approximately 3,000 Carmike has will give it a base of over 8,000 screens in over 600 theaters in 45 states. So, huge, countrywide operation. And then in terms of the deal, its effect on the two companies, they expect it to be accretive to cash flow right off the bat, and the combined company they think will enjoy about $35 million in annual cost synergies. And as you would expect, really similar operations. They're seeing that in accounting, finance, technology, and they're also seeing some benefits with their negotiations. Right, they're now the largest theater chain.
That was where I was going to go.
They get to push their negotiations
Yeah.
a little harder in terms of the revenue sharing with a lot of the major studios, and investors seem pretty happy with the deal. Obviously, Carmike shares traded up on the offer closer to the offer price, and AMC shares are up over 10% since announcing the deal.
That's pretty rare to see an acquirer rise.
I think a lot of people are very positive because of how complementary their networks are. You have AMC, which is generally more focused in urban areas in the Northeast, and then you have Carmike, and maybe this is why you're not as familiar with it, is more focused on like rural, small town, suburban areas in the Southeast. So you put
I do not
together,
make it to small town. I do not make it to small town Florida.
The first time I had ever seen a Carmike theater was when I was still at UVA in Charlottesville.
Got it. Yeah.
And like I said, AMC shares up over 10% since announcing the deal, so investors seem pretty bullish and happy. But not to say there aren't going to be some challenges and other things to keep in mind. And I think it's really good here to have some background in industry color in terms of where the theater industry, the theater sector or the operators have been overall. So, first of all, you got to recall that China's Dalian Wanda Group, so it's run by the richest man in China. His name's Wang Jianlin. He acquired AMC in 2012 for $2.6 billion. And since then, it's been pretty clear he's trying to expand his influence over entertainment, worldwide. Because, Wanda is already the largest theater operator worldwide. They already own the largest theater chain in China. So this now gives them the largest theater chain in the U.S. as well. So they got this nice filled out portfolio there. And, they're moving really aggressively with more consolidation. So they announced a deal to acquire Legendary Entertainment a few months ago for $3.5 billion. And keep in mind that AMC also acquired Starplex Cinemas last year for about $170 million. Tons of consolidation in the industry, and that's probably just because of some higher level trends, I think, with consumers and entertainment. Fact of the matter is there's a lot of these new options, be it streaming services, and just taking, I think, away in terms of entertainment options from movie theaters. People have a lot of choices now on a Friday night for what they want to do. And, for the industry-wide, the number of screens and ticket sales have fluctuated significantly over the past decade or two. They've been stagnant or declining too. And I feel like within the U.S., these theater chains and this industry, it's a perfect example of a saturated market. So these companies have been forced, the only way they can achieve better scale is either through some of these consolidating deals, or they've been trying to boost their results with a lot of these new amenities. So think what's come up in the past 10, 15 years, IMAX, 3D, you have the popular
lounge chairs.
These lounge chairs, and then I see way bigger menus now, I feel like, at the concession stand, where it used to be popcorn, candy, soda.
Well,
now you also have much more substantial food. Think wings, chicken tenders, I see fries, even burgers sometimes at some of these theaters. So,
and bars sometimes.
Exactly. So bar service too.
What I had known this for a while, but we talked about it in 6-8 months ago when we did our original theater show. What percentage of revenues and profits for theaters comes from the concession stands? Because it's all their money.
So
basically.
So we mentioned the revenue sharing deals that they have with these major studios. So the thing is, the margins that they get from their concessions, I think at least double what they get from the ticket
They're charging
sales.
$8 for popcorn that costs 10 cents.
So you can see how important that is, and you can see how they're innovating, in that space by expanding this menu. I personally, as a moviegoer, in terms of the viewing experience, don't necessarily appreciate when somebody walks in and it's smells like fried chicken in the theater, and I can hear them eating. But at the same time, I can understand that. With this kind of saturated market, they're pushing with these lounge chairs and these other offerings to try and boost attendance. And this deal itself is, in my view, also not necessarily certain, just because there is going to be a lot of oversight and review by regulatory authorities. And the fact that you have bring it down from 4 to 3 for the bigger players, and just the size of it. I think a lot of investors are expecting the combined entity to have to shed some theaters in order for the deal to go through.
Got it. Cool. All right. Well, thank you for your thoughts, Vince.
Thanks, Sean.
Have a great day. If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that is industryfocus@fool.com. As always, people in this program may have interest in the stocks that they talk about, and the Motley Fool may have interest in these stocks, so don't buy or sell anything based solely on what you hear in this program. For Vincent Shen, I'm Sean O'Reilly. Thanks for listening, and Fool on.